Hey guys, good morning. RB here. In this video, I'm just gonna quickly cover up the QQQ or the tech index, US 100 or QQQ, and the SPX with the US 500, just to share what are the counts that I'm looking at and the dip levels that would be my preferred area of buying back again. So for the last few weeks I've not been trading indexes since I have started talking about this daily divergence on the chart and somewhat on the weekly as well. And the price was not showing me any conviction of going on either side. So for last 3 or so weeks I have stayed away from trading indexes on a for a swing, even not with ETFs, because again the price was just like range bound within 100 points on SPX. It wasn't making much sense to kind of get in and risk your capital there with the risk of being back holding them for a while, but some sort of an event which happens overnight and you don't have a complete control on it. And that's what has happened, right? We have been waiting for the catalyst in my last few posts that I've shared that it's gonna happen, it's gonna happen, it's waiting for a catalyst, but I don't know what catalyst it would be, and it's gonna come something out of the blue, or it's gonna be a Supreme Court verdict, or whatnot. I mean, we can't predict that, and most of the time it starts over the holiday or the after hours or whatnot, right? So here we are with Trump starting the new trade war with Europe over Greenland, and futures are kind of down 1%, breaking this wedge for now. And I would not expect this to be rebought and go back into the wedge. I think the damage is done. Now we just have to figure out how much it will dip and in which formations it will dip, right? That's what we are going to talk about today. So all what I'm looking at, there are like two ways to kind of solve this matter. One is that either the wave 4 is starting right now, which means this whole initial jump that I had back on April 7th or 8th, where SPX kind of rallied 8 to 10% if I remember correctly, and then there was a dip, and then of course we started the rally where we gained about 43% in the last year from this dip. This whole thing is a wave 3 from this dip, right? So from this point at 5117 to to this peak about 69.85 or 69.87, whatever we tested here at the top, this was my wave 3, right? So with a 1 2 3 4 and 5. Now this is an ending diagonal. It completed that wave 5 for the wave 3. And if I look at the extensions, let's see how much we stretched. I think it was somewhere about 261%, if I am correct. No, it was a little lower than that. So yeah, so a little bit lower than that. It didn't go to 7200, so it was somewhere above 200%, but fell short of 261, which is okay, but still a very good extension for wave 3. Now what we are looking for is a wave 4 pullback. Now with between the earnings and between this trade war, for the next 3-4 weeks at least, we can have this drawdown continue. Now that's one way of doing things, and if this is a wave 4 start, so potentially we will may see some reaction from these key levels or the key swing lows here, which is 6822, 6715, and if that would make my wave A here, like something like this, you can have a bounce, and then you can have a C leg down, and ideally you would want the liquidity to be swept below these November and October lows, right? So that's one way of making a wave 4. And if I have to measure what that wave 4 depth looks like, it's very very minimal. It's I think about 23% in that area. So let's just see, where is 38% and 23? Yeah, 6481 is exactly 23%. That's where these November and October lows are sitting. So an ideal spot to come here, maybe do a little bit deeper if it wants to, but I think sweeping just below it, doing 6481 is sufficient enough. And from there on, we can build up another rally into the summer, into the midterms, and whatever is going to happen will probably happen after that. What it means is that once this 5 waves complete, another drawdown will start, right? So that's one way of looking into it. The other option, which I have been sharing in my post as well, was where this wave 3 was finished here, like this one. Let me just redo the counts here, like 3, 4, and this 5 was finished here, which means the 3, same level, but just a different way of looking at things. Now, the point here is if the sell-off accelerates, if there's things like, let's say, the Supreme Court verdict comes out, and it's somehow market reacts negatively to that, right? And then in this case, if this accelerates and becomes an impulse, what I'm looking at it as a C leg for wave 4. Now, when we call a C leg for wave 4, what we are looking at is a flat correction, which means this one was my wave A dip. I had a B which went above the start of the A, so it becomes either expanded or a running flat. Now, in running flat, it does not go as low as A. It stops in between. So I would expect somewhere here in the 6600 or 6700 range, the dip will be shallow. But in case of expanded flat, again, I would expect the C to come below A, sweep below here, and complete my 4, and then the rally starts. So doesn't matter the count that you use. It's more or less that whether the drawdown is impulsive, it comes down pretty sharp as things accelerate or escalate between the countries, and or some other catalyst also comes along, and it just the drawdown is very sharp. I would start considering it as an impulse of C leg, as an impulse C leg of wave 4. If it stays choppy, run through the earning all through the next 3-4 weeks, where Mag 7 will report and other major earnings will show up as well. And if this is, like I said, something like a choppy wave, then the previous wave count that I shared with you would make more sense, right? So in any case, the levels do not change. We are looking at these lows to be swept, and equal lows are a point of a good point to retest, because there's a pool of liquidity there. There are a lot of stop orders for the longs people are holding into, right? And there are people who want to short once those once these levels breaches, right? So there's a hell lot of liquidity there for the smart money to kind of dive into, and before they kind of do the next leg, they want to go and hit all the stops, buy from the retail, and then start up the next leg up, right? So an idle spot. And if you see, if things gets really really tricky, if this is expanded flat, or even this fourth wave which we talked about before, it can go into the equal lows here about 6359. It can go into the 38% equal lows here as well, about 6200 6189 level, right? So there's nothing like invalidating this bullish count where we have a rally back into the midterms, even if it comes to 6200. So 38% is normal for wave 4. Even it can go up to 50% as well, which is what it happened last time when it went to 4800 from 61 or 6170 here, 6130 6148 here to 4800. That was almost 50% of a retracement. And the way we were counting this whole thing was like we had this 1, 2, 3, 4, and we are now into a fifth wave. If it has fifth wave completed here, I don't think so. I think there'll be one more towards the midterm, and the big drawdown will only happen after, possibly after that. I don't know what the result is going to be for the midterm, but this is what I can see from the wave counts at least, right? So now if you look into this dip and you measure how deep the wave 4 was, I think it was probably even a little more than 50%, right? So still wave 4, still we got a new high. So depends now how much things gets complex, and how much issue we have with the tariffs and with the ruling and all that kind of stuff, and the kind of just depends there. So I would see what price is telling me once it comes into these October November lows. Is it just ready to bounce? Have my divergence been cleared off altogether, at least from the daily? and the weekly doesn't need to get oversold at all. I mean, even some dip will be fine there, but I at least need daily divergences to be cleared and daily to get into the oversold territory by the sell-off by the time it comes here. And we'll see if 6480 is a good level to get long, or at least start longing, and then also see if it's gonna breach further. But that's far down the line. Not worried about that right now. All what I'm going to see is how it kind of dips into our levels and what kind of reactions we get. I'm not going to be looking at trying to do some major longs here. You can scalp this if you want to with a 2DT or 3DT sort of thing, but again, when the drawdown happens, sometime it's pretty sharp. It doesn't have to be this choppy. We have seen drawdowns like this. We have seen drawdown like this, right? So wanted to get into a safer level, which in my opinion is here at the November lows, right? So that would be something that I would be looking at. Now coming to QQQ or US 100, things are a little different. We never made a new high, so I can simply say we are still part of the wave 4 here. This was my A leg, this was my B leg going on, and now I'm into the C leg down. That's one of the option, or I think it's a good option to stick with. And again, the same November lows make sense. Things go a little lower, I can accept 23,000 here as well, which in my opinion will be again somewhere into the 38% mark. If you see, let's just put the Fibonacci retracements. Yeah, it comes very close to 38%, a little deeper, like 23,500 will give it exactly 38%. 22,500 is the level that you can look into, right? So certainly looking for a pullback like this depends on how much SPX pulls, and along with that this pulls as well. And if I'm looking into, let's say, an equal ABC leg, though this is not this is not zigzag, but even if I have to measure an equal leg ABC here, so looking at the extensions, my 100% with A equals to C comes around November lows right here, right? So this is fine, goes a little below, sweeps below 23,000, touches 22,500, that's fine as well. So anywhere below November lows, I'll start looking into where is the suitable buying level based on the price structure that we see. Does it come impulsively down, or is it just again choppy, bouncing with all the earnings coming up and in its own time? It can be a complex. If this was ABC down, we can have another complex wave down and mark this whole thing as a WXY. But again, that doesn't matter what the internal count of this wave 4 looks like. At the end of the day, I'm looking at November lows to be taken out once, and just go from there. So this is where my head has been. I have shared these videos before too, though it took a while for it to materialize, and till this sort of a dip happens, we are always looking at what are the bullish alternatives and all that, and bulls were not coming through in the last 3-4 weeks at all, with NDX or US 100 not being able to clear these highs. It was pretty kind of obvious that something else is going on. We just need to be in the waiting period for a while, right? So liquidity swept, drop, and it's pushing down. So this is where I am, and if it does anything different, let's say this dip is also getting bought for some reason, it doesn't changes my theory. I'm not looking at a breakout or just to accelerate again back into sharply into 7,400 or anything like that. If it does something that where it starts going back above again 6,900, 6,930, I'll have to sit back and wait again till it kind of resolves, right? So until you have a good price structure to trade against, there is no point forcing your trades. So with that, this is the video I wanted to share with you guys since this dip has started. Hope this makes sense and help you plan for next buys. Thank you very much. Have a good one. Bye bye.